For traders that have emailed and asked, the links for the free downloads are in the description box below. Just click on the link or copy and paste and put that in your browser. The 4-step method to high performance trading and the 7-step daily routine for high performance traders create the rituals, the mindset, and the winning attitude to master the markets. Bulletproof yourself with your daily routine and your habits. Force yourself to be getting better, 1% better every single day. How good can you get, traders? Again, the free downloads, the links are down below. They're both free courses. Let's get started. G'day traders, Stacey Burke from Stacey Burke Trading. Continuing our discussion, 50 pips a day, mastering the weekly template. And today we'll talk about oil in this video, and we'll talk about the oil trade on Monday, Labor Day weekend, Monday, North American holiday. And in next video, we'll be talking about the holiday after a Monday holiday in the U.S. markets and how that can play out in the coming week. So coming back from our previous video, we talked about identifying the best instruments that are setting up for the session that you're going to trade. Then knowing where you're at in the template, day 1, day 2, day 3, in that 3-day cycle, but also in our Monday to Friday cycle. Now there's been some confusion again. I received quite a few emails again and questions following up on that, and we'll talk about that. Then having your bias as to whether or not it's a trend trade, reversal trade, or potentially just a trading range for a scalp. And that comes back to the session that you're trading. Some traders are going to be trading London based on their location geographically, or maybe Asia, maybe New York, maybe Asia and New York, or maybe London and New York, again, depending on their availability, their time frame, and then focusing on the instrument that potentially gives you the best trade setup from your playbook. Now, I've posted several screenshots of 5-day shorts, and again, today was no different with oil. Now, we'll review last week's template. So we talk about week 1, week 2, week 3, and I'm going to, again, encourage everybody to go and do their homework because you need to master this yourself. Otherwise, as I mentioned in one of the previous mindset videos, watching will never do anything for you because it's about the process. It's about you being able to understand what you're looking for in an instrument, in a session, in a template to identify a trade setup. So watching doesn't do anything because then you're actually clueless as to the process itself. Day 1, day 2, day 3, and there is a template. Regardless of commitments of traders, interest rates, all of those things, you can have a bias over a macro time frame. But in terms of a 1-hour trade, that can mean absolutely nothing in the day itself, in the session itself, for a first red day trade, a 3 levels of rise trade, whatever that may be. It can completely be in line with a larger time frame cycle, but it may not be the trade itself in that session. So just in terms of simplicity, we had beginning of the month came down, so we come back in oil. We had a low put in place. They went up the following week, beginning of August, put in a peak formation reversal. On the Friday, came down in the 3rd week and put a low in place. So I talked about the day 0 effect. We're just going to kind of briefly touch on this today because I'm talking about the templates. But we have a high and a low for the month. They traded into the low of the month, week 1, week 2, then last week on our Monday. Okay, so again, we'll put in this high first. Monday triggers longs into the market. Here's our Monday, pink line. I know some traders have said, can you make my cursor black? I have no idea how to do that. Technology is not my thing. I trade. That's it. I don't have any clue about people complain about my microphone and my video camera and everything else. I apologize, but the information here is, worth a lot more. You can go buy your own new camera. So we have on the Monday we go higher, and I talked about you break out of a daily high or low. We have longs now triggered into the market on the Monday, but more importantly, I talk about allowing the day to set up in a lot of cases, especially at the beginning of the weekend. We're inside of a weekly high and low. We have 3 pushes and a peak formation on the Friday, which means our day Monday, day 1, can potentially be a day 2 in a 3-day cycle. So the confusion is that, well, I don't understand. Can Friday be day 1? And, any day can be day 1 if it's the high or the low of the week. But when we start the week, it's just realize that every week we start the day 1 is Monday. It's a clean template, but that allows us to form our larger thesis over the 3-day cycles. So Friday is our peak formation low. Day 2, we get a high and a low. Asia high, London low. For the explosive trend trade inside, remember we triggered longs first. They came down into the low. They made a low in London. They made a high in Asia. They come down into the low and continue the move back through the high of the day. They triggered longs first. That can tell us that the high is potentially not in place yet. But also, we're inside of a peak formation. We traded into the low. We traded down into the open of the U.S. session for day on Monday, triggering longs into the market. We have day 1 longs in the market. We have the break of Friday's high. So we have day 1 longs in the market. We take out the high of the week from the previous week on week 3 weeks of rise. The market puts in a peak formation low in the end of our 12 candle window. So again, you need to go and mark off your chart so you know exactly what you're seeing. So I've had a lot of traders ask, well, what about 4-hour time frames and 1-hour time frames and all those things? A low is a low and a high is a high, regardless of the time frame you're trading. If we trigger other time frame traders into the market at the breaks of daily highs and lows, everybody is in the market. 4-hour, 1-hour, 15-minute, daily, the whole, other time frames. But remember what I said about the initial balance. Day 1, day 2. Typically, we'll set the high and the low for the week. We are at the high of the week on week 3. We have 3 days. Day 1, day 2, day 3, Friday, Monday, Tuesday. We have 3 levels of rise plus. But when we start the week, we have a consolidation on Monday. Then we proceed to go up 100, 200, 300 pips on day 1. That's 3 levels of rise on day 1. Coming out of the consolidation. So some traders have asked, well, that's 4 levels. When we have the consolidation, that is level 1. Level 2, level 3. 300 pips outside of the consolidation, taking out the high of the week. And then understanding that if you are trading inside of the peak formations, because traders have asked me before, but you're trading inside, and I've said this and I repeat this over and over again, you can trade inside in a session window, but make sure you are in the right direction, because often that will take traders into the high or the low, trapping them in the wrong direction before the larger trade begins. So day 1, day 2. So understand, if you can master the template, when you come to the screen to trade your 3-hour session in that high-low, the 3-hour window will establish a high and low for that session, and that will often be a trade. So we can have a London, US, Asia trade on day 1. We can have a London high of the day trade at the high of the day in Asia. We can have a low of the day trade at the open of New York on day 1, Monday, which is the second day back to the high of the week from our peak formation low on Friday. So I know traders are going to get confused, but if you master this, it's very, very simple. And the whole point is that if it's simple, you can reproduce this and you can master your trade setups in the sessions, and you'll understand what best playbook trade setups are. We get a high of the week trade in the London session for a massive move all the way down to the low of the peak formation low on Friday. 3 days of rise. Coming back to the theory. Remember my theory. Day 1, day 2, day 3 for a large move. Now that can be 3 hours. We can get a 1 hour, 2 hours, a 3rd hour, and then a 4th hour trade. So it's still a 1, 2, 3 for a large move down. And again, the same applies for longs, but I tend to focus on shorts. So it can be a Monday, Tuesday, Wednesday inside day, Thursday triggers the high for a Friday trade. It's still day 1, day 2 longs, day 3 longs in the market because we have inside bar traders now triggered in the market, trapping volume. So it can be a 4-day setup, but it's still a 1, 2, 3. Now the same thing can happen at the beginning of a session. We can have, number 1, I want to see the pump. And this applies for longs. And we'll be focusing on longs as well when we see those. As I have mentioned, I have a bias to the downside. But the first thing you need is the pump, the lift, levels of rise. It can be 2 levels. It can be 2 levels of rise, 2 days. But then we want to see the second break of structure. And in some cases, if this breaks a daily high, we have longs triggered in the market. On day 2, we have day 2 longs triggered in the market. So again, I've talked about high of day trades in the U.S. session. We could have a U.S. session or a high of London trade on day 2. But they might put a low in place and continue the next day. Now we have day 3 longs in the market. And they can take this up on news, pop the top, break down, and that can be our break in structure on day 4. And Friday, of course, we can get a Friday peak formation reversal that doesn't quite go up to that high because they've already broken structure. It's a narrow range, breaks down, and continues to have a large move all the way back down. There are different templates, different scenarios, but I want you to understand 1, 2, 3. Can be 3 hours, can be 3 days, it can be 3 levels. 3 levels, 3 sessions, all of those things. 1, 2, 3. So now if we have day 1 shorts in the market, and why do we have day 1 shorts? So we had day 1 longs in the market. Day 2 triggered the break of the high. We took out the low of the day on day 2, but we also took out the low of day 1 and Monday, the low of the week. Now we have day 1 shorts in the market. Day 1 shorts. Day 1 shorts are in the market. That means all the longs above Monday are trapped. So think about what I repeat this over and over again. When they have trapped volume, the chances of them returning to those levels is next to nothing because they have traders trapped who are losing money. If they go back up, that allows those losing traders to get out of the market without experiencing a loss. And the name of the game is to take money from the many and transfer it to the few. I'm just going to point out something that's important to notice. These death candles, these large pin hammer candles, okay, these are telltale opportunities for a return back to this level, 25 to 50 in that range, where a peak formation could continue for a move back down. Now we also had first red day. So day 2 now forms our first red day. Why is it a first red day? Because the close is below the open, opens up here, and we put a peak formation high in before breaking down and closing below the open, but also below trapped volume. We have 3 days plus of volume now trapped above the close of that market. This is a textbook first red day opportunity on a day 2. Now on a first red day, so if we come back to this, market opens, puts in a peak formation high first before breaking down and closing below the open. We have volume caught above here to the left. But what I look for an ideal best trade setup on a first red day are 3 peaks, 3 sessions for the large move back down through the low of the day. That is the textbook best trade opportunity, and typically that will be in New York. 3 levels, 3 sessions for a high of the day sell opportunity. And again, for longs, for first green day, the same thing can apply after a first red day. Now, if I don't get this, this is where there may be other session trade opportunities. I'll just reverse this, because what can happen on a first red day, and we've seen this before, is we can get an Asian high and a London sell and a U.S. session continuation for the low-hanging fruit trade after a first red day. But when we're down here, I know that my opportunities, if I'm selling in the U.S., I'm down in that continuation. We may be headed to a previous low of the week, but it may be only a 25 to 50 pip move because we're on the third level of drop. So again, I emphasize to these traders who have a false belief that watching a trade will make you a better trader when there are variations of trades in sessions and setups. And until you master the templates and understand what you are actually looking for, that's like watching surgery and thinking you're going to become a better surgeon. It doesn't happen. So we had the first red day, then we had on day 3. Okay, so remember what I said. Day 1, day 2, day 3. If we've already reversed and taken out the high of the week and we have day 1 shorts in the market, what is my bias heading into the next day? Probably day 2 shorts, which means day 2, level 2 trend trade opportunity, depending on when the trade setup happens in which session. So we have 3 levels of rise between Asia and London for a sell high session trade in the London session to continue that move. Now, I've talked about this as well, and I'm trying to not have too long of videos, but I also emphasize mastering the 100 pip box, because then you'll understand false breaks and levels of rise and fall at the timing window. We go 25 pips outside of the 100 pip box after 3 levels of rise. Now, I say this over and over again. 25 pips typically will be a false break. Look where we traded into. The death candle, the bear pin hammer. 3 levels of rise, 150 pips plus, up from the low of the day for a high of the day sell opportunity in the London session. Day 2 shorts are in the market. Okay? Day 3, but we have day 2 shorts in the market. Why is it day 2 shorts? Because it's the second day that shorts have traded on the breakout of other time frame traders. We work into the low for 3 pushes. We went over this trade last week. This was a reversal opportunity in the U.S. session on day 3, and I've talked about this as well. Your odds increase day 2, day 3 for successful reversal trades at the higher low of the day. If it's a day 1 runner, we don't want to necessarily be counter-trending a market that is now expanding the range on day 1. Day 2 shorts are in the market, peak formation high, and then a late session trade for traders in the Northern Hemisphere for a high of the session, high of the U.S. day opportunity after 3 levels of rise, 150 pips, peak formation high outside of the 3-hour window into shorts from the London session for a 200 pip plus move down into the low of the day. We head into Thursday. Now, this is an unusual week. I talked about payrolls week can often be a 4-day setup. So we've had Tuesday's day 1, Wednesday day 2, Thursday day 3, continuing the trade. Now remember that you will often potentially get dragged in the wrong direction on a good 4-day setup heading into payrolls. What that means is that the lower traders end up shorting this market. There's a high possibility that this last leg on the last day can become order flow for a reversal trade on the payrolls day. We want to consolidate volume, potentially trap traders, and then have our payrolls Friday be the next move for either a pump and dump, a breakout trade, whatever that may be. Now, just in simple terms, a lot of information, but you need to visually look at these charts and understand that they drop this market 3 levels, 100, 100, and they get into the third 100 pip box and it fails 50 pips into the box. 25 to 50 pips is our false break at the low of the week, the low of the month, new month beginning, heading into a Payrolls Friday. The market goes vertical and lifts up 3 levels prior to Payrolls. 100, 100, 100, puts in a high in the London session, and Payrolls takes traders up into the high of the day, the week, not the week, but the day itself, and into the peak formation from the Asian session. So we had volume caught down low. They put 100 plus pips into those traders. They go up 3 levels of rise and put in a high of the day. Payrolls takes traders back up into the high. 3 pushes. The New York market, equity markets open, trade back up into the high for a 50 plus pip move down into the low of the session and the low hanging fruit from the Asian longs. And notice the pump. So this is the same thing. Session 1, session 2, session 3 to the high, retest, break in structure, pull back, and a collapse back down into the reversal from the beginning of Payrolls Friday. So now we look at this and I think in my head, potentially flipping the book. But we have 3 levels of rise on Monday, day 1 again, taking out Friday's high of the day. This triggers breakout traders. Now we have 3 sessions, Asia. London is a continuation. You'll notice there's no peak formation. This is a continuation. And then a vertical lift. A vertical lift. Now, I took this trade in the New York session. I wasn't even going to trade today. It's Labor Day Monday. We'll talk about this, about holiday Mondays in the next video, because we can see some huge moves coming the day after a holiday Monday, especially on pairs that were fairly tightly range bound. But we have 3 levels of rise: 100, 100, 100 in the third level to 75. Now I took this trade in the second hour up at 50, knowing that potentially we could still be seeing another lift, because that's 1 hour. Now we'll look at that. That lift is a dead giveaway. We have 1 hour lift. But the second hour, which was our first hour of the 12 candle window, is an inside bar. Inside bar. I'll just identify that. You can again go look at your charts. This is spot crude. Spot crude, that first hour is an inside bar. What that means is that when they break the high, we have inside bar traders now in the market, and they have stops below that bar at the quarter level at 75. This is a 75 pip box. Now, so we have 1 hour of rise prior to the US 12 candle window. Second hour makes a high and a low inside. That's an inside bar. An inside bar. That break of the high is at the second hour is a stop hunt, but it also triggers breakout traders. Now I shorted this inside the high bull above 50. Thesis being that this had the potential to collapse back down through 50 and get the low-hanging fruit back to 25, which it eventually did. I didn't expect too much. I thought we could be in a fairly docile market, being Labor Day Monday. U.S. markets are closed, but what we actually did get is a 1, 2, and a third hour of rise. 1 hour up, inside bar. Second hour breaks the high. Third hour breaks the high, triggers breakout traders up high, locks in our high for a short trade inside of that peak formation, anywhere between that high and 50 for me. I know traders have asked several times last week about trades. Why didn't I short it up here? All of these things you need to understand. You can short it up here, but if you get caught in a vertical move, in a parabolic move, you will be blown out. They will go 100 pips in 7 minutes if it's a parabolic move. Once this market collapses, anywhere underneath is my entry. My original trade this morning was inside of that collapse of the high bull above 50. It was filled at 53. I targeted 100 pip move. As soon as the market came down underneath the quarter and started to trade into the pin hammer from the beginning of the second hour, I moved my stop 25 pips. Reason being is that this market should do exactly what happened to the right of our screen, which I'll highlight. If it's going through, it should collapse and go straight through because they have longs all trapped above that level. But they took one more hour to do that. Market actually surprised me today. Just goes to show you, again, anything can happen. But they took a third hour. And all this is first we have the pump candle. Just mark this in here. That first hour between 7 and 8 o'clock is our pump. That's the pump. They take it up 1 hour. Second hour was an inside bar. My thesis was they had inside bar traders trapped and it was going to go down at the New York Open. Got 25, but second hour is our second hit to the high. So we have 1 hour. Inside bar traders are in the market now. That's a 1, 2, and then 3 hours, 3 levels, locking in the high, 1, 2, 3. On day one, longs are triggered, and we have day one longs already in the market for a nice 100 pip move down. So again, opportunities are everywhere. Some of the pairs obviously are going to be pretty quiet today. Oil actually, surprisingly enough, gave a textbook level 3 trade setup on day one, our Monday, after 3 levels, 3 sessions, and 3 hours of rise, and it's still going as we speak. So hopefully you got value from today's video, traders. Weekly template on oil. Master the templates. Understand, again, pick an instrument that identifies your best opportunity in the session that you're trading, where it's at in the template, what your bias is. Again, if I'm looking for shorts, I want to see that 3 levels, 3 sessions, 3 hours, peak formations, whatever that may be. In that session, know when you don't have a trade set up in that instrument in your session that you're trading. Filter it down to 1 or 2 of your best trade setups, and then know how you're going to execute, manage, and lock in your profits. And as I said to one trader, my motto is I don't care. I don't care if I get 25 or 50 or 100. Obviously, I'd like to get 100 on every trade, but I'm getting paid regardless. I'm going to get paid. So I make sure. I've been burned enough times that when this comes down, if it doesn't collapse through, my stop's here because it should break right through. But I want to get something. I want to get paid for my time. I want to get paid for being at the screen. I'm not there to do it for joys or kicks or anything else. I've been burned enough times. I've learned my lesson, and I repeat this over and over again. Lock in the money. Get off the screen. Come back later. There'll be another opportunity tomorrow. I'll talk about textbook perfect. Obviously, a bit more patience, another hour involved in this setup, but 100 pip opportunity, high of the day, 3 levels, 3 sessions, 3 hours. Have a great week, traders. That's again, I think after Labor Day, we will see some large moves tomorrow. Be prepared to have your best trading week yet. Have a great day, and may the markets go with you.